all day.
Right, hello everybody, and welcome to today's Trend Signal podcast. It's the 17th of August, 2020, and we're going to be talking about the forex and stock markets in our usual podcast here with Jerry Miller. Hi, Jerry.
Hello there. Hi, morning.
And today we're going to be talking about a bit of a review of what's been going on over the last week or so, what the main talking points were, setting us up for the week ahead. Pretty decent moves last week. We had gold having a massive pullback, so big profit taking. Perhaps we're going to talk about that. And we're sort of well into August now. We're going to talk about how the August trading tends to adopt a different style, and we seem a little bit Augusty really at the moment. So, Jerry, let's pass over to you, shall we? So, what do we know? What's been going on?
I like that, Aidan. Augusty.
Yes,
we're a bit Augusty. I think what happens in a typical year, and I'd hasten to add, this is clearly not a typical year, but in a typical year, a lot of people, certainly in the financial sector, they take their annual vacations, certainly in the US and the likes of Central Europe, certainly in France, a lot of people take their vacations in the whole of August. So it tends to have fewer participants, hence there's less activity. But it doesn't mean there aren't moves, Adrian, because when you get moves and there aren't so many people around, often there's not so much of a resistance to those moves, and you can get some huge swings. Not that we've had huge swings. Gold, yes, last week we had a big sell-off, but it's that August effect, but it's just not a typical year. So to what extent it is the August effect, I'm not sure at this stage, but it feels quieter, I'd say.
Yeah, that's definitely the case. And you're absolutely right. You can still get some big moves, particularly bank holidays as well. You often think nothing's going to happen, but on lower volumes, you do still get those big moves. But often those moves are eliminated by the time that the US reopens on Tuesday. It's quite an interesting time anyway. But so Jerry, what's been happening over in the Far East, and what's been happening in the markets then?
Okay, well, we woke up this morning to find a bit of a bounce in Far East markets. The CSI was up about 1.4%, Hang Seng in Hong Kong up about 1%, all down to the People's Bank of China injecting liquidity into the banking system, which is interesting because over the weekend there was more news from the Trump administration about. It just sounded a bit belligerent, really, sort of targeting more Chinese firms in his quest to challenge and rid the US of any firms that are linked to the Chinese state, which it's got to be. A lot of them are, really, I would have thought. But anyway, but that's sort of buoyed the markets despite the Trump news over the weekend, as I said. And then FX markets, euro and sterling a little bit stronger again against the dollar ahead of the minutes from the Federal Open Market Committee, the rate setting committee, a bit like our MPC here in the UK. That's the rate setting committee in the US, the US Central Bank. But markets last week, stocks did well. There's definitely an underperformance here in Europe versus the US. In fact, versus a lot of markets against the US. The FTSE really struggled, only up about 57 points, up just short of 1%. Contrast that to the Dow, up about 490 odd points, that's 1.8%. The S&P up 21 points, that's only 0.64%. DAX 226 up at 1.8%. So you can see the difference in the two. Nikkei up 959 points, 4.25%, and all this down. A lot of it's down to foreign exchange effects. The S&P really nudging. If you look at those the charts there, you can see it nudging. Certainly, you can see it on the Dow,
the S&P's here,
but the S&P's attempting to push to its all-time highs, and there's a bit of a lid on it at the moment, and it's backed away a few times. I certainly had several attempts last week. Look at it, just extraordinary. I mean, what a buying opportunity that was.
Yeah, it's unreal, isn't
it? It's that classic sort of central bank government long stop, as it were. If the markets go bad, the central bank and government step in. It's not the real economy, as we've discussed, but wow. FTSE, well, that's been constrained, I think, by the stronger sterling relative to where it used to be. And I think, after the UK decided to quarantine all travellers from France, it looks like the travel leisure stocks got hit quite badly on Friday. So travel, the likes of the airlines and the likes of TUI and IAG
I
really
think the other thing
struggled.
as well is that it's the FTSE's got more sort of traditional companies, shall we say, hasn't it, that make it up. It's the banks, it's the insurance, it's the mining stocks, it's oils, these sorts of businesses, pharmaceuticals, traditional companies. Whereas a lot of the drive and the growth from the APs on the technology side, isn't it?
Yeah,
Which we don't have too many of.
no, no,
Hence the lag. So you can see
and
on
no
the
one wants.
S&Ps go on.
Yeah, I was going to say no one wants to go near the banks, do they? I mean, it's just
No.
they're a bad penny at the moment.
So you've got the S&Ps up at, back to its all-time highs, whereas you look at the recent highs in January on the FTSE of 7,600. Well, what have we recovered? My guess is probably about 40% of the fall,
Yeah,
compared to the S&Ps, which have recovered nearly 100% of the fall. And the Nikkei way ahead, isn't it?
yeah.
The Nasdaq, sorry.
The
Yeah.
Nasdaq's new highs, that's right. And the market breadth in the States, as we've discussed previously, it's all technology driven. So that those key 4 stocks that are responsible. There are 5 stocks that actually are responsible for 20% of the market capitalization of the S&P 500, and they've all had a blistering run. 4 of them are just unbelievable. I don't want to start repeating previous comments, but it is extraordinary. But there's an article in the FT today about how some of the smaller stocks, the strategy for a lot of investors would be buy a lot of the small cap stocks and just sit on them and wait for them to explode. That's not really been happening. So I do think it's not telling a true picture really of what's going on in the US. There's definitely been a reallocation. If you're not in those 5 technology stocks, Adrian, you are not up. You're not back at the where it was just before the pandemic. So and that's just to be very clear. Other than that, well, Japanese markets have performed really well just in this last week because of the yen. And if you look at the dollar yen, you can see that weakening against sterling, sorry, against the dollar and the euro and sterling, of course. Gold, well, that's the big one, isn't it? If you want to put on a gold chart,
let's have gold. So
big,
this is the 4-hour chart, really starting to sell off from the 7th of August, but my word, the 11th and the 10th, that's the ridiculous candlestick. In fact, if I just show this on the daily chart, where are we? There. Just an outrageous candlestick, to be honest, given what's been happening. You always say, don't we, up by the stairs, down by the escalator. Or the elevator.
It's a very crowded trade, Adrian, and I think we were discussing earlier on about Berkshire Hathaway. That's Warren Buffett's business, although he doesn't own all of it, obviously. But that's reallocated some of its funds into a gold fund, as you were discussing this morning with me. And I think that's sort of significant, but it doesn't always get it right, though, does he? I know I remember he tried to short the dollar one year and got absolutely creamed. And I think his investment in Tesco at the top of the market was another bet noir. But no, gold's done well. But that sell-off is actually the largest sell-off in history in terms of actual dollar movements, but not in percentages. It's because it's up at 2050. It was always going to correct quite quickly, bearing in mind, where has it come from? Since mid-July, it was around $1,800. That's a big move on the upside. You're bound to get the cork's bound to pop at some stage, and we saw that, last week.
Yeah. Okay. And what about oil, Jerry?
Oh, a little bit dull, really. It took a bit of a leg up the previous week, and then it gets stuck in the same sort of very tight, relatively tight trading range. I think it's still tracking US equity markets, but the gains are very, very modest. I think central bank minutes may sort of highlight the concerns over the global pandemic recovery, and I think that could hit oil possibly. And also we got an OPEC meeting on Tuesday. We can get onto that when we go through the calendar, but that's the OPEC JMMC, and I haven't got a clue what that meant, and I've looked it up, Joint Ministerial Monitoring Committee, and that's they'll be discussing their policy, and that is something that could affect the oil market. So whenever we reach a sort of a denouement in equities, and if there is a change of strategy in the oil and from OPEC, that could affect oil. But for now, quiet.
Yeah. Okay. Well, I think that's pretty much it, Jerry, isn't it? So we will be back in a few moments. We'll be recording the podcast for the week ahead, looking at the main events. So please tune in for the podcast on your favorite podcast place for that. And if you'd also like to attend one of our live trading events this week, then you're welcome to book along for that as well. So you can go to our short link, so bit.ly/learnts, so bit.ly/learnts. You could book in for a free live trading webinar that we're running this week. Choose the slot that's both suited to you, and we'll teach you one of our strategies that can help you identify some real high probability turning points using some very simple rules to pick those up as well for FX, indices and commodities. So make sure you come along to that. But otherwise, as I said, we're going to jump off now and we're going to start recording the events for the trading week ahead. So please have a look at that out too. All the best, guys. Have a great week's trading.